Okay, fam, welcome back. So today we're going to be going over the macro markets overview for April of 2025. So with that being said, let's get it. Okay, so we're going to start with the SPX. This is the actual S&P 500. We've already gone over the 200-week moving average getting hit right about this area, 4,800. The oversold signal on the RSIs on the weekly, which is extremely rare, and the super Zweig bread thrust, which has occurred, I think, 7 or 8 times over the last 60 years. It's indicated a market bottom every single time, and the forward projections over the next 12 months is a 100% hit rate of roughly about 20 plus percent. So you guys are free to do research on that if you missed it prior. It's an interesting indicator, so it's very rare. I mean, 60 years is a long time, so anyways, so the SPX, we are pushing up against the EMAs. I would say right now there is a good chance, based on structure, that we could actually push higher from this point. We're pushing back into the EMAs. I'd like to see another weekly candle close above the EMAs. If the Fed comes out this week with the FOMC and they're bullish, or dovish, I should say, then we'll probably see another green candle following this one. Just going to point this out to you guys that we're not that far off from all-time highs. It's been a pretty fast recovery, so we're down 7%, whereas before we were down about 21%. There is still some discounts right now, but it's not as deep as it was. But there's no guarantee that these markets have to go lower either. I mean, they could chop sideways, maybe pull back a little bit and then take off, or they could just chop sideways right into structure and then boom, rip straight through, or just keep on going up. Any of those could happen. So the NASDAQ, pretty much the same thing. So we got the break of the trend line. This one actually did close above the EMA, so that's even more bullish than the SPX in my opinion. And next levels I'd be looking at is 20,600 and the all-time highs at 22,200. So currently down a little bit less than 10%, and the maximum drawdown here was way bigger, so it was almost 26%. So some discounts, but not huge discounts at this point. Okay, Russell 2000. So we are pushing up against this prior resistance here again. It could just go straight through. That typically doesn't happen in markets, but anything's possible. I would say likely anything's possible. We could even push up this next week into these EMAs, 2100 pullback, and then boom, take off to the next level, which would be all the way up at right around 2500. So something like that could happen. As of right now, the drawdown is still roughly about 18% on this. So any kind of smaller cap stocks like SoFi, I would say Palantir, but it's not small anymore. SoundHound, maybe the quantum stock, stuff like that is kind of part of this index. It could be something to potentially look at. I mean, they're not necessarily listed in the Russell 2000. They may or may not be. Some of these are listed on the NASDAQ and whatnot, but you guys get my point, right? Smaller market cap stocks usually are in the Russell 2000. So only up about 10% from the swing lows on this one. Again, the Russell is kind of something that traders would probably take on if we got more Fed rate cuts. That's probably likely what would happen there. Until then, some people may be hesitant to actually buy into the Russell, so there's also that. The Dow Jones, same thing, trying to test this flip zone. Again, the EMA is sitting right at the flip zone, 41,800. As of right now, the market is still a little bit of a discount, so 8.6%, not as deep as it was, but again, usually when we get a sell-off like this, last time we saw something this aggressive was in 2020. It bounced back pretty quick. So am I surprised by this? No, not really. Okay, so stocks above the 50. I told you guys back here that this thing was essentially dead and we were probably likely seeing a bottom and we were going to get a recovery. That's exactly what we got. This thing did a 30x in like 4 weeks. It's absolutely insane, but it's not overbought, not oversold right now. This is more of a swing traders indicator, or maybe like kind of, I don't know, people looking to invest for like less than a year, I would say. But the point I want to make here with the 50 days is that we are above the 50 break-even zone. So there's 0 to 100. Anything above 50 with a close is a swing traders market. Swing trades on, right? Below that is kind of swing trades off. We're currently swing trades on as of right now. And the same thing with the S&P 500 version. It's looking pretty bullish right now, in my opinion. So the 200-day moving average is different. This is more of an investor's indicator. Again, getting to the oversold signal is extremely rare, and it really doesn't happen that often. So when the opportunity presents itself, especially for people like dividend investors, they really want to take advantage of this and buy as much as they can at those levels before it eventually evaporates and the markets go back to all-time highs. So we're not above the 50 yet, but we're pretty close. So almost at that break-even level. The Nasdaq is a little bit more undervalued. That's to be expected. I mean, a lot of these Nasdaq-related ETFs we've been buying are still very off their lows, like JEPQ, GPIC, and so on. So this kind of reflects that. Okay, so yield curve, we don't need to discuss that right now. The Fed funds rate, we also don't need to discuss that. The market is not expecting a Fed rate cut this week. The FOMC is also this week. We'll have to see what happens with that. I mean, it's possible, even if they don't do a rate cut, but they come out with extremely dovish forward guidance, maybe the markets rip on that. That could always happen too, similar to an earnings result. So something to keep an eye out there. And the yields, we don't really need to talk about those. They've come down, which is good. And the inflation rate also had a pretty substantial drop, so that increases very greatly the chances of a Fed rate cut sooner rather than later. Obviously, the closer it gets to 2%, the more convinced the Fed's going to be, like, oh yeah, we can cut now, one of these days, right? So unemployment had a read on Friday. It basically was unchanged. Again, I've told you guys my theory on this, that basically the whole the economy cooling because of the Fed still keeping the rates high could actually be offset by the jobs being brought back from overseas from the tariffs. Which in that case, I would expect the unemployment rate to remain flat and jobs in the job market to actually increase as the Fed continues to cut rates. I know it sounds strange. You're like, well, that doesn't make any sense. Usually when the Fed cuts, the economy cools and unemployment goes up. Yes, I'm aware of that. But like I said, considering the macro and the political landscape and all that stuff, I just don't see that happening. And we do study just about every facet of finance that you can imagine. So even politics, believe it or not, we even study politics and the Congress and all that to, lawmaking to try to understand how it affects the finance markets, because the two are actually very closely intertwined. Okay, so we've gone over all that. So let's talk about oil. So oil is basically used in everything in society. Or I shouldn't say everything, but a lot of things in society. We did get a rejection off this upper trend line here, a crack below the EMAs, and basically a lower low below 67 here. That's all very bullish, and we did even get below the support zone. So this is needed. Oil has to come down in order for inflation to keep cooling off. I would say maybe it could bottom somewhere around 50 or even as low as 44. There is quite a bit of downside potential here on oil. You can see the futures market is already open. It's down roughly about 4%. So that's, in my opinion, that's very bullish for the potential of earlier rate cuts. Okay, so let's talk about the metals real quick. So my stance from last month basically has not changed, and gold is extremely expensive. I would not touch it with a 10-foot pole. If I was looking to buy, I'd buy somewhere around 2,200 to 2,000. I just think it's way too overextended right now. So about a 31 to 35% drop. And again, the monthly RSI has been hit in terms of being overbought. It went way above and beyond the cup and handle pattern targets. So this thing is basically just there's warning signs flashing in my mind when I look at this chart. I'm just like, yeah, I just can't touch this, dude. So silver, this one is hitting resistance. It's starting to look kind of like a rolling pattern or distribution here at the top at a previous sell zone. The RSI is overbought. I would probably be looking for this thing to pull back to maybe somewhere around at least $26 an ounce. If the market's really generous, all the way down to about $20 an ounce. So pretty substantial downside there. Palladium's very cheap. It's steal, in my opinion, right now. Because I remember before when I was taking a look at buying some palladium and it was $3,000 an ounce, I was just looking at this thing thinking like, man, don't do it, dude. Don't feel the FOMO, just don't buy. And boy, am I glad I didn't. So, because the sell-off was pretty bad. It's much cheaper now. It's about 66% cheaper. The RSI is oversold. Perfect buy zone right here at 900. Again, the upside is all the way up to 2,900. Could it go lower than this? Yeah, it's possible. But I mean, this is a flip zone from all the way back in 2010. Platinum. So the indicators would lie to you here and say that this thing is not oversold, not overbought, which it's actually not lying. It's true, but when you look at the support zone here, I mean, we're basically sitting pretty much at it. So very, very slightly above it. I would say platinum's pretty cheap right now. So the upside here, even from this level, could be as high as 97%. Again, it could take months or years for that to play out. This is kind of more of a long-term investor's positioning type chart that we're looking at here. Okay, so last two things here, or sorry, last three things. So we'll cover Bitcoin real quick. Usually we do this in conjunction with the Bitcoin miners and the crypto stocks, but since this is macro, we'll just cover it briefly here. So basically, two things to consider here. One is the monthly trend line. Again, we are still above it. We got to bounce off of it. That's good, which means the crypto bull run is still intact, and we have not hit 90 to 95 on the RSI on the monthly time frame, which means that likely the cycle top is still not in. Okay. If we get a break and a close below the trend line on the monthly time frame, that is bad news for crypto. I don't think that's going to happen, at least not at the very least, and not until the end of this year. But you can see once we broke it back here in the previous cycle, what happened? A bear market. And then in the cycle before that in 2017, what happened? A bear market. Okay, so last two things here. So we'll go over the VIX. So the summation of the VIX is pretty straightforward. So when we get these huge spikes, that's usually peak fear. That is the best time or close to the best time to be buying the dip. That is also a pretty strong indication once it does start to cool off that likely the market bottom has already appeared. And we are seeing that, and you guys can see this has occurred many times over the years, okay? This year, 2024, 2020, 2018, 2015, and then even all the way back in 2011. So pretty rare read. And once we do get back below 20, that's basically peak fear is gone, and the markets are likely going to keep climbing at that point. That's a strong indication when it gets below 20 that we're going to see massive rips. So something to keep an eye out on. The dollar index and Bitcoin have an inverse correlation. So I told you guys I was expecting the dollar index to actually fall off a cliff, but we needed to see a break of this trend line. And we got that. As a matter of fact, not only did we get that, we also got a break of the EMAs and a lower low here below this low with a crack of the support now turned into resistance, right? And so whether this thing, as long as this thing doesn't go straight back up to this previous peak up here at 110, then I think Bitcoin's likely probably going to be ripping pretty soon. It has been already, but I mean like back to new all-time highs. So anyways, hope you all enjoyed this content. Please like, comment, and subscribe, and I'll see y'all later. Peace.